Hi everyone, welcome to Tuesday, the 15th of July. Welcome to the proptrade.com. Today we're looking at obviously the dump of inflation data that we've had. Up and coming in about 10 minutes, we've got Canadian and US CPI data, consumer price inflation. The most important piece of data out of this lot is this core one here. The month-on-month and the year-on-year core number for the United States. Obviously, the Canadian number obviously has a big impact on the Canadian dollar, and obviously dollar CAD could be the pair that moves quite significantly depending on how this data comes out, as the market expects or surprises the market, either side or both sides of the equation. So look for this column to fill in later on. And also in 10 minutes, we've got the quite important, less important than it used to be. This used to be a high impact event, the Empire State Manufacturing Index. It's a measure of activity in the manufacturing area in New York State, one of the most significant areas for manufacturing in the United States. Potential, well, not traditionally, quite a volatile number. As you can see here, it was negative 16 last month. It's expected to improve quite significantly, but still remain negative at minus 8.3. Not really market moving, but the sense is, again, it's a measure of sentiment. You see here on the Forex Factory calendar how it it's been negative for well over here since 2022, 23, 24. So regardless of the president, it's been negative. We had this spike in November to the upside, but that really was an outlier for November 2024, and it's been negative, and it's been worse than expected. So it chops around a lot, basically, is the outcome. So don't read too much into it. It can be quite volatile. More importantly, though, the CPI data here. The core month-on-month 0.3 of 1%, expected a little tick up. How much of that has been impacted by the tariffs, if any? Obviously, the administration, Trump's administration would say there isn't any. We need interest rates at 1%, as he's been saying in the last few days. That would be a big hold up. And obviously then the other big issue we've seen, which the markets have taken in their stride, is this noise and rhetoric from his team about the illegality of some of the refurbishments that's been done on the Fed building, trying to talk about making it a grounds for sacking Jay Powell. Again, a lot of noise out of this administration, a lot of spinning plates, lots of transactional sort of deals, and it might be forgotten about in a few days. But don't rule anything out, don't rule anything in. Is the way to deal perhaps with the President Trump. So 7 minutes of the big data. If we look at the core, it's back to the US CPI. So the core CPI data on a monthly basis, annualized basis, 2.6%. You can see how it's come down nicely, but it's ticking up. It's been very persistent around this 2.5%. The wider measure 2.6 is expected to tick up to today. Let's see what that number's looking like. And the core number here on a monthly basis, 0.3 of 1%. But again, you see it's undershot. See the brown here. We take the forecast off. You can see how it's undershot consistently, and this is the argument that the president has got, and he has some right to say that inflation has disappeared. So here from the last it came in higher than expected on a monthly basis back in February. Since then, with the ogre of the tariffs hanging around, the core number has moved down quite significantly, 0.1 of 1% for June. We'll see what the July number looks like in a minute. If we just bring our calendar up, you see a little bit more detail on the annualized number. Just bear with me. Sorry, I should have opened this earlier. Yeah, if we just actually let me just filter out just the big events. I'll leave all the countries on. I've decided it's so much hanging around to mess with that. So where are we? Yeah, we are Wednesday. Sorry, Tuesday, not Wednesday, you fool. Let's bring that down a wee bit so you can see properly. Let's see if there's any questions. Obviously, anything you want to have a look at market-wise, let me let me have a look, and we'll have a look at the markets quickly in the next 5 minutes before the data comes out. I'll come back to the what's happened already today in a minute. So the core, as we see, the 2.8 here on this calendar, it's talking about 3%. That would be a bit of a sticker for the president. The core 0.3 of 1%. So again, it's the rounding up, remember, for the actual number. So it probably comes in at 0.24678 or something, and that would make it to 0.2. If it comes in at 0.251, it'll go up to 0.3. So look at the detail. Obviously, there's the Empire State we were looking at before. What I was pulling this up for was to show you the annualized monthly number here, 0.3 of 1%, the core 0.3 of 1% also. So we'll see how all this comes out. So annualized 2.6 is the headline number that will go across the tickers. Just north of the border in Canada, we have this 2.5% on an annualized basis, and 0.6, a bit stickier, a bit has proved stickier in Canada than south of the border. So have a look what that looks like later. And again, as I said at the beginning of the week, a whole plethora of Fed speak and central bank speak this week, as we're in the middle of July and they're all starting their holidays, or about to start their holidays. Interesting one here will be Michelle Bowman. She's one of the key advocates of a cut in July. See what she's got to say later on. UK's Governor Bailey's got a speech later on tonight as well. I'm not sure that's not the Mansion House speech, is it, as well? And then we've got private inventories. Obviously, the other big thing that's happening today, as we're still, let me just check, I can't get caught out with the countdown. We're still 3 minutes away. The other big thing that's happening today, obviously, is the big arrival of the second quarter earnings season. We've got Citibank, we've got JP Morgan, the Wall Street's biggest bank, America's biggest bank, also quoted on the Dow, the Dow 30, the industrial index, but the JP Morgan's on there, and Wells Fargo, and a lot of other financial institutions reporting as well today. I think Bank of New York Mellon's another one I noticed reporting. Earlier this morning, we had better than expected GDP numbers out of China, but also confirming the need for stimulus in the Chinese economy. So a bit better numbers, but the issue won't go away. GDP growing at 0.1 of 1% on a quarterly basis. On an annualized basis, it's coming worse than expected, 5.2%. Remember, in China, with billions of people to, I think it's on here as well, there's a quarterly one, 5.2%, with billions of people, just bring the calendar up again there, to drive the economy. You know, it needs to be running at 6% plus 8% as it was back here in the early zeros before the slow down into the pandemic, and then obviously pandemic hit. Now we haven't really recovered since. You can see here this 23-24, we're not back over the 6% area at all for China. And obviously take Chinese data with a bit of a pinch of salt, guys. Remember, it's it's what the government wants the world to see and hear data wise, so always take it with a bit of pinch of salt. But anyway, it's still sluggish. We're still looking for stimulus from the central bank and the government there, particularly around housing. And yeah, so obviously the last thing they wanted was a trade war, another trade war with the United States and with President Trump. But that's what's spinning out at the moment, isn't it? Lots of friction to global trade. Last thing the Chinese wanted. Also this morning we had good, where are Tuesday, we had better than expected ZEW data out of Germany. It's important because although it's a sentiment indicator, it's starting to track up. If we look again, if we go back to the Forex factory calendar, we look at the I've got a minute left. I'll come to the US and China, Canadian data in a minute. 52.7, that's the best reading we've had for a while, beating expectations. See, the blue was above the yellow here, back here It was also up this area, so 52, 53 will show some significant upbeat in the German industrial base, basically. So ZEW is important for that reason. So from the misery of April, we've recovered quite positively, and it's trending higher. That's the key thing. 3 months consecutively higher, beating expectations each of the last months, May, June, and July. So see what the August number looks like when it comes out next month as well. So strong number this morning, and the best one really since back here, February 2022. So a certain tick up in sentiment, at least in Germany. So let's just go to the charts. Let's bring in the dollar CAD, because that's the one that's going to potentially move the most on our data coming out. So let's go down the 5-minute chart, and there the data is obviously already broken. So dollar CAD down. We've poked to 136.75 zone. So just put a little line on that as the data comes out. Those of you that can trade it, that's looking like a big gobble up of the rally we've had from this low at 136.80, or the low of the day. Is that the low of the day? Let me just bring that in. Let's go to see what the higher time frames are doing. So really, we're very much sideways action here, dollar CAD. So the low below that is through here at 136.70. But we're at 136.74 at the moment. We've held above that at the moment. But here you can see on the hourly chart, we've been big down candle this morning, 8 o'clock, and it's been down. So be looking to take this short on the hourly time frame. The 30-minute be a bit nicer move down. We had a move up to the 20, but didn't, couldn't produce a new high of the day there at 136.90. So we can't get to 137. So we're down. The data's perhaps confirmed that, but let's have a look at the data in a minute. But that's next downside target again. We might test 136.75. We'll see. Other than that, if we hold at this level here, we'd like to hold above 136.80 to take this back up here on this 30-minute time frame. But you short traders that are trading it in the time frame, that's a short on the data or ahead of the data, and just keep short at the moment there. But there's your key. There's that key blip down at 12 o'clock. If we break below that, that's negative. We hold above that, that's relatively positive in these short 2-minute time frames. We go back to our 5-minute time frame, because we can actually trade that one on that 5-minute around the data coming out. So let's have a quick butchers at the actual data. So what have we got? We have got, let's start with the US, and we'll come back to the Canadian. Well, there's the headline. 2.7%, much hotter than expected. Upgrade from last month as well to 2.4%. So we've gone from 2.4 to 2.7. It was expected to tick up 2 points of 1%, and we've gone up 3 ticks. That's a hot reading for inflation. Perhaps not as hot as many were expecting it could have leapt to, but that certainly would have spooked things. And we've got that move down, or move against the dollar on that. Empire State is coming much better than expected. I said it was volatile, but that's coming positively, so that should lift the dollar if anything. But the headline inflation number, as we said, would grab the headlines, which it has. 2.7. Monthly numbers come in line with expectations, but up 0.2 of 1%, 0.3 of 1%. So it's remaining sticky. Across the border in Canada, we're coming in at 3.1 for the median. The trim's coming in as expected at 0.3, and the commons coming in at 2.6. So it's a little bit weaker than expected, but overall it's in line with expectations. If that's coming at 2.6, that's coming at 3.1. That has a higher weight in the median than the common, and so overall we're sort of in line in Canada. Hence the dollar moving down on its heavier reading than the Canadian dollar. So that looks like that should be sort of continue its bias to the downside today. So I'd be looking for a break of that 136.80 zone at 136.82 we saw here on this 5-minute time frame, and then a break of 136.74 to the downside. If we're going to move this back up, it needs to get back over the this little resistance at 136.93 here on the short term dollar CAD, but bias remains to the downside on the 5-minute time frame. You can't see the. Why can't you see the? Can you see the? What's happened to the MACD there? What's happened to my MACD readings? They've all gone a bit squiffy on all the readings, but obviously earnings are coming across. Citigroup operating expenses 13.58 coming across the terminal here, up 0.5%, or 0.56 of 1%. Citigroup data coming through as well. We'll come back to the stocks in a minute, but dollar, yeah, down or continuing to loop down. That's the 5-minute. We saw the hourly chart had moved lower. Still very much range bound though here the last few days since the 10th of July. That low we got to 136.50 zone here on was that Friday? When was the 10th? 10th was Thursday, wasn't it? Last week. So yeah, continuing to move to the downside. If you're trading this, I say on an intraday basis, they're the levels we wanted to see if we can test again. 136.74 to the downside, but we want to break over 136.86 there. But still buys to the our downside, as I said. Let's have a look at the majors and how the rest of the majors have responded to the dollar data in particular. 65.75 for the Aussie. Aussie lifted, as you might expect here on the 5-minute time frame. The trend hasn't changed. We had this bit of a pickup for the dollar over the last 3 or 4 days, from the 11th down to this low here. We couldn't get under 65.50 with any movement. 65.45 with these hourly candles here, and then we've ticked back up to 65.70. And dot 66 is obviously a stretch too far, but we're now back into this sort of cluster area here at 65.80. That's your next upside target for Aussie traders on a short-term basis. 65.80, another 10 or so pips from where we are. We've had a look at the CAD. Swissy 79.60. The recovery in the dollar sort of continues against the Swiss franc, but it's not going anywhere. We're not going up, we're not going down. So this is one I'm really watching. There could be some significant weakness here. There could be some significant recovery as well. Both are possible. I'm not doing anything at the moment, but we made a nice move on this leg down, didn't we, at the end of June? And we're consolidating at lows, which is always well, it depends which way you are. If you're still short this, you're probably waiting. If you're looking to go long, you've probably got a little trend line through the bottom of this lot here on the daily time frame. Let's put that in. I can zoom that up. Can I zoom that up? How do I zoom that up? Not really, not very well. Let's put a little trend line on the bottom of this one. But you know, is it going to hold? Who knows? Maybe that's a wee bit better. That's not working. What a trend line. Or even a ray will do. There we are. There we are. Sort of here. So up trend, but as you can see here, for 1, 2, 3, 4, 5, 6 days, we are flat. 1, 2, 3, 4, 5, 6, 7th day now, flat at the 9-period moving average, which is leveled out. The 20 is starting to flatten out, and the 50 is starting to flatten out as well. So there's perhaps signs of a floor forming, but far too early to tell. For this to go long, for me, we'd need to get back over 80. 80. You see that's at dot 80. 10, but certainly dot 80 is the big resistance to the upside. We can easily see this bouncing into this and then coming down and forming new lows. So this low here we put at the bottom of our intraday low there at 78.70 is the next downside target. And then if you can see I thought I'd put in a lower tip, but yeah, the rally is really quite muted, but we'll see. We'll see if that continues to push higher. Yen, on the other hand, dollars improved on the weakening yen. We're back to 148. These are a trend line from last week that we beginning of the month, in fact, that we put on. The breach here on the 7th last week has held a big breach of the 50 and the 20-day moving average. The 145 level, hugely psychological. It was breached again here, and then on Friday, sorry, not Friday, yeah, Friday, big positive candle to close the week, follow through yesterday, and then we're up again today. And look where we're stalling currently on that intraday high, which was proved a turning point, pivot area from the 23rd. It's also just shy of the next upside target, which sits at 148.50. So 148.50 is the next, unsurprisingly, the next resistance area for dollar yen. But here on a daily basis, that remains been. It's having quite a good run, and that's to do with weakness of the yen, guys, rather than strength of the dollars we've seen in the other crosses. Kiwi back under 60, so that's a long. If you want to look at some other yen crosses, they're the ones perhaps that are very much in play at the moment. Chats up. So Kiwi shy of .60. Again, we remember we turned around from .61, so we're back under .60. This big make that a bit make that 2, I think. Make it 2. Why can I make it 2? Let's make it thicker than that. That's not letting me. Okay. There it is. That's why. There we are. There we are. There's .60. It's a more significant pivot area. So came under that or into it on Friday, under it on Monday. Yes. So we were looking for some. This looked like with some weakness. We would short this earlier in the week. It didn't play out as it reversed. But we're back up today, but still under .60. So that could also be a significant break following the rejection of the bounce back over the 20-day moving average there last Thursday. So Thursday was up, Friday down, Monday down, and Tuesday's bounced somewhat, but we're under .60. So I'm watching that one as well for some perhaps more weakness. And then we go to this 59.46 area, which is a first area target. And then there's a lot of fresh air to take us to 59. So if this fails to break back over the 50-day moving average today, that's looking like added to this short position from the move lower, or the initial move lower on Friday for the Kiwi. So Kiwi under pressure, yen under pressure against a bit more resilient dollar. Conversely, in Europe, the euro is still holding up. We are still holding the 20-day moving average at the moment, but things are getting tighter as the pressure on the central ECB are continuing to chatter about pausing rate cuts in. Well, it's looking like they are going to pause next week. Is it next week? Yeah, next week the ECB meet. So we have tested the 20-day moving average yesterday. For the first time since this test we'd seen here on the 23rd of June. So for 2 and a bit weeks, we'd been on a bit of a for a week or so. We'd been on a bit of a rally, couldn't get over 118, and then we've moved down quite slowly, a bit like we've seen in the other moves against the Swiss franc as well. But so far, the 20-day moving average is holding. So I'm obviously watching that over the next few days. You can see here, as we've broken it in the past, it's held here. So let's see what this first test looks like, but it's a significant move. It's more of a significant move into it this time, isn't it? That was a more of a slide and a big bounce, only a 3-day slide and then a bounce. So this is a longer slide with a bit more momentum. The MACD here, you can see, has crossed short here on the 8th of July. The RSI is moving down out of an oversold area. So some of the guys that got short up here on the 8th and the 9th are nicely in the money, or even on that Friday the 3rd, nicely in the money on that short euro position. So see what happens to the 20-day moving average going forward. If that, we then could run into 116 quite quickly, and then the next support is this the first fib level on this leg to the upside that looks like it's rolled over. So the next major key fib support on this leg up takes us to the 38.2 fib level at 15.25. So 15.25, 116, and then the 20-day moving average is our first support at 16.50 zone. They're the three levels to watch. The downside for the euro, if the 15.16 zone, if this, sorry, 16.15 zone holds here on the euro, we then go back to test through dot 17 and then up to have another test of dot 118 to the upside. Sterling similarly has rolled over from a strong rally, similar downtrend line we put on last week, except here with the euros, with the sterling, we're under the 50, and then Friday's close took us actually under the 50-day moving average, and it took us under the 135 area. So that was a dabble enough for a short position, closing under the 135. My only reservation on Friday would have been the fact that the candle wasn't a big breach of 135, but we'd been over it for so long. It's been a really good run, but as you can see, 134, as we said before, lots of fresh air down to that, and we've had a down day yesterday and struggling to hold it today. So again, another one, a breach of 134, like we breached 135, which is a more significant level, 135. That's looking distinctly possible. You can see these corresponding down legs, so that's looking quite weak. And then we break 134, and then we're into this cluster. It takes us to 132.55. So there's a definite move against sterling at the moment, but 134 becomes perhaps more significant than 135 should have been, or appears to, or has been in the past. Let me put it like that. Okay, so big rejection of 136 big rejection of 138 to the upside, through 136 eventually, and didn't pause at 135 on Friday, and that was the big position where many would have added on the break of the 50-day moving average, but as I say, it's held before. Are we going to come back up in 2 or 3 days? That's the one to watch as well. So dollar up against the Europeans a bit, not so much against the Swissy because it's moved as much. Dollar CAD going sideways, Aussie and the Kiwi, the yen particularly under pressure. So the signs of the dollar rise is continuing. However, jumping back to today and intraday traders, which I think most of you are watching this. Let's go back to the data. The data out of the US was a hotter reading for CPI on the headline number. Go back to our calendar. It's got more detail on it. Actually, I've not updated it. That's why. Monday or Tuesday. Keep my filter. Just do the filter quickly. Get rid of the one ball measures. So the 3 ball measure, the core CPI came in at 0.2 of 1% from 0.3 of 1%. So that's actually cooler on this calendar. Interestingly, core CPI is coming at 2.9%. The headline 2.7 from 2.4. That's quite a lift, and that positive Empire State for what it's worth, God bless them, and 2.7% hottest core CPI in Canada also. So as we saw, the balance between dollar and CAD was very much favouring the dollar when we were last there. Sorry, the Canadian loonie, I should say, rather than the dollar, but there we are. We've been down, we've been up, and we're down again. So I'd be still short this. That immediate reaction has been sold off again. So we've shorted. So I'd still be short this, looking for this test of 136.74 again from the rejection of the 20 and 50 moving average here on the 5-minute chart. So guys, it's 48. It's 18 minutes after the data has gone out. That's looking still short to me. The 5 is looping lower. The 5 minutes I'm talking about. The 15-minute has been looping lower all day. There we are. And 30 minutes similar. So, you're with the trend, as we talked about yesterday when we were talking about scalping, with the trend. That's your next target, the spike we got to on the data. It might be a step too far, but never mind. We're still short. I give you stop loss good. And then the next low here on the 30-minute chart takes to 136.71 from 136.75 zone. Again, 75 in a big round number. So short there on the 30 minutes. So take your choice, trace your trades, but that's still in line with the higher time frame. We got the one out you see. We were up earlier in the morning. European session, we've been under the 20-day period moving average since the first time I looked at the charts this morning on the 6 o'clock candle. But a bit of a bounce, final chamois back over 137 and then down here at 8 o'clock when most of the volume came in and the European market, stock markets opened as well, taking this pair lower. So you can see there on the 1 hourly chart, we've already, there's still lows around that 136.70 area, potentially to test today for dollar. CAD. Elsewhere, let's start at the top of the shop. Bitcoin, we got this all-time high at 123. Yesterday we went to 123. I should pull that up, shouldn't I? To 123. There we are. It's just for completeness. We did get to 123. Make that. And all is well with the world. In the world of Bitcoin, you would argue, and lots of positive spin noise coming out of the White House about that, about regulation, the situation there. So we've had a massive rally, 123, and as I was showing you earlier in the week, this time 7 years ago, when I did my recce of Bitcoin, when we were the summer of 2017, Bitcoin was trading between $2,000 and $3,000. The end of August, or the beginning of August, it actually breached the $3,000 level for the very first time. 2017. Here we are, 7 short years later, with the itch scratching away, taking us to $123,000 for 1 Billy Bitcoin. Sold off quite aggressively yesterday since that almighty rally. But as you can see here, this blue, I think that's my daily trend line, isn't it? I put on a while ago, that blue dotted line, or is it? No, it's not that at all. It is, what that is, what's that doing there? That must have been extended from all the way back here in March. No, it's not that. Oh, anyway, Bitcoin remains bid. We've broken out from this base really significantly. And as you can see there, the 20-day moving averages are moving up to that previous all-time high around by that 112,000 and above the January resistance that we had at 109,000. So no doubt some profit being taken today on this massive 5-6 day rally to the upside. The lithium's following. Energies, oil. I put a post up on our Discord group about going short oil. I would say it was a different on my trading platform. It has a different setup, so it wasn't valid basically, and I've deleted it since. But this went short. I was actually short UK oil yesterday. It's out of the money. It was in the money earlier. It's out of the money at the moment. But anyway, that's something for a different platform. So UK oil, I was short. So as you can see, we're still sort of clustering through this 60. We can't get over $70 for UK oil, and as far as US oil is concerned, we certainly can't get over $70. There's a $70 level. We're clustering, but clustering above the key $67 support area. So any obviously news coming out of the Middle East in particular, the Russian situation, the Iranian situation, all of it's oil dependent. Chinese situation, China, big consumer of oil, also a big producer of oil. Don't forget that. And any of the other, somewhat peripheral producers, like the outlier that is Venezuela, for instance, with their massive reserves offshore. So all of that moves that market. But as you can see, it's very choppy. We're up, we're down, down, up there, down day yesterday, quite significant down day yesterday. as we came off $69 all the way down to $67, a $2 move. That's a big move on the oil market. So just sideways during the summer at the moment through that 20-day. So non-directional, even though my system did trigger on another setup. So oil sideways as far as we're concerned here. Indices, I was mixed bag on indices. I kept the only trade from last week that was still open was long here on the S&P 500, obviously with earnings season kicking off in major view today. We are still long this, and we're actually back in the money. I think is that our entry there. Yeah, I closed some of the others out, but this one's still in the money on this one. Oh, it is not still in the money. It's in the money. I did actually put a target. I can't remember if I put a target on that one, but anyway, that's in the money and progressing. I might fiddle with the stop loss on that later on, but that's the only one that was open from last week. Last night, I actually went the other way around. We got the system triggered short on the here, like what? Not last night. It was last night. There, we got a short here, and that's still currently open. It was out the money. It's still open. I nearly closed it earlier this morning, but it's still open. On that, but it's one of those more aggressive strategies. So I will watch that later on today and update you whether that's still in play. The other two positions from last night was a Euro New Zealand, which was short. And I haven't updated. I haven't checked these on Euro. I don't think I've put it in here. So that was short. That was yesterday from here. So that one's in the money. I haven't actually put the entry levels on there. I'll do that later. But that's open and in the money. And an Aussie CAD, which then sort of defeated itself. And I think that one's closed out because that one was also short yesterday. And as you can see, it's whipped back today. It hasn't hit the stop loss, but that's been closed out. The actual numbers, I'm not quite sure what it was, but what I do with these more aggressive ones, that's the daily candle that's triggered short. I go short before the close of business because obviously the spreads can be really quite significant on all platforms, not just trading view and trade locker late in the day. So I try to put them on before London's certainly roundabout when London's still ticking over at 6. And New York is still in full flow on the forex business. But then what I do, so there's the daily. I then tend to click down. So that was where was it? Yesterday would have been short on this sort of candle here. The actual between these two on these 4-hour candles. Yeah, it's been this one here, and obviously that's gone against me, so it's stopped out. But sorry, I would close that out. But you can see the 6 o'clock 4-hour candle, massive one. But what I do, I tend to look at the 1 hour and then the 15 minutes to decide what to do when I get up in the morning. So this morning, this was okay, but at 7 o'clock. But then the 8 o'clock candle was rammed up. But I got out around about here, I think, or during this hour. I can't remember exactly when this one would have been closed out, but it was around about here somewhere. So that was okay on the hourly, but then I drilled down right into the 15 minutes to get a feel of what's going on when I first wake up and look at the markets here around about 7 o'clock. And this was okay, but then it suddenly went against me here at 8:15. So it was here that had sort of spiked my, actually that's not going the wrong direction. So we got out round about here, I don't know, 7:30, something like that, as we got to this level. And then certainly that would have confirmed it as breached here on the 15-minute to the upside. So although it might come back, obviously it's gone even higher than that. So we got out quickly on those overnight positions when, as I mentioned, when I actually put them on here. So I'll show you what I mean. Under the this position here, the trading strategies level, ought to be checked early tomorrow morning. That's what I mean. It's sort of 7:30, quarter past 7 o'clock time when these get checked. So this Euro Oz, the Euro CAD, Jesus, the Aussie CAD was the one that was closed earlier, and I think the euro. So actually, the euro Kiwi was also not looking too clever, but that one stayed open, and that one's now back in the money. And this is that short on the US 30. We got in at 444,464. I'll update the charts later on as well on that. So anyway, we haven't had any trades this week, so I'm going to have a look at the data of the big banks that's coming out. So Citi, JP Morgan, Wells Fargo, and lots of other financial companies reporting. As although you can't trade the individual stocks here at theproptrade.com, you can obviously trade the impact, which is the indices, which is what we started to look at, hadn't we? The Dow is generally sort of sideways on the day. The DAX in Germany, remember we got the all-time high over 24,000, close to 24,000, over 24,500 earlier last week. Again, that's cooled down quite significantly. You can see on the hourly chart, but the daily remains bid to the upside, or rolled over from the 24,500 level. Down for 2 days, bounced a wee bit yesterday, but again, as I say, bid because we're still holding the 20 period moving average, and getting a bit tight with the 50 period moving average, so that might be the last of the rallies in the summer for the DAX, but time will tell. Yesterday, just while we're in Europe, the FTSE got to over a hugely psychological 9,000 level, so a new all-time high for the FTSE. That was the level we got stopped out on last week. We were long this, weren't we? Perhaps pulled the stop loss up a bit too close, but there we go. Such is life. But again, nice breakout from this level here. New all-time high, and obviously some profits being taken at 9,000 on the FTSE, but that remains bid, and that's still looking very strong to the upside. The cross was here, still not yet into the overbought zone. 66 on the RSI is positive. We've had a rally dip, so that's still looking quite positive for the FTSE. So don't be scared of buying that at 9,000 to the upside. The Nasdaq 100 back to 23,000, big fat round number. We had that positive data or positive news flow from Nvidia. It was only, I think, about 0.5% yesterday, but Nvidia, the boss, is going to China, expected to be seen and being quite visible in China. They've agreed to the cut down chip being sold in China as well as the United States. So we could see quite a move on Nvidia today. Perhaps not. It's might be already priced in. Elsewhere, obviously, there was politically there was the Vladimir being chastised in public by the man himself. As he had Mr. Rutte, the head of the NATO, sat next to him. So rearming missiles, Patriot missiles as well, going to Ukraine via NATO. American missiles going to Ukraine as the summer push by the Russian continues to make quite significant inroads, and Trump sounding quite exacerbated against Vladimir Putin. There's a pre-market move here on the big banks, and I'm just seeing here Wells Fargo down 2.98%. They always underperform the other two. My little document always quite short Wells Fargo on their on earnings day. Again, 3.3% now. They're down. Citigroup are up 0.4%, and JP Morgan, the biggest of them all, down 0.94%, in a market that's lower anyway. But JP Morgan, Citi beat estimates. Wells Fargo misses. We've read that many times. So Wells Fargo disappointing yet again. The other two to come next week: Goldman's, Morgan Stanley. Actually, no, it's later this week, isn't it? I'm talking about next week. It's only Tuesday. They normally come out on a Thursday or Friday, these big three, but 3% now, 3.3% for Wells Fargo. But anyway, that'll have obviously a follow-through impact on the stock market, but not the Nasdaq. Obviously, there's no banks quoted on the Nasdaq, sitting on the Nasdaq 100. So as you can see here, we had a good Monday. We're having a good Tuesday here in the derivatives market. I think I closed this one out, didn't I? Yes, I think I did close this one out. The Nasdaq closed it. I can't remember if we had the Nasdaq position open. Yeah, did I? Yeah, no, we lost 86 points on Friday on that one. You closed out. Stop loss got a bit too close again. There we go. There you can see it there. There's the stop loss pulled up to the entry. Or was that a manual stop loss? Oh, still got it there. But anyway, it's out. It was close. We lost 86 points on that on Friday. But we're finished the day up, and we're up on Monday and so on Friday. There we are. That's what it was. It was just spiked into, wasn't it? That's obviously what's happened on Friday. If we go back to the hourly time frame, you can see a bit more clearly there. If we go back to Friday's noise, this is Friday's data, and there's the stop loss pulled up. So we were under it for quite a while actually there, and opened. Hang on a minute. What's talking about? Yeah, that's 30. That's right. So we were under it. There we are, out yesterday on Friday, but rallied yesterday and up again today. 23,000 breaching on the Nasdaq 100, and then the biggest of them all, the SPX 500, which we are still in and long. Closed at 6,268 yesterday, the S&P 500, and that's a position that's was nearly closed out. This is an area we're going to close out. We didn't close it, we left it, and back through entry, and that's in the money now to the upside. Gold is really not doing very much. 3350. I'm saying not doing very much. Got the only time we're continuing to getting it's sort of summer sort of doldrums area. But what I did do earlier on gold was on a 4-hour candle, we put some fib levels on. I was speaking to some colleagues, friends of mine, about the gold situation on there. There were 4-hour traders. As you can see here, this here on the 4-hour, we've had a nice significant leg here from the 9th of July through to this top at 3375 last week, and then we've had a quick down leg. So we've moved up and then down, and we've moved into the first key fib level that we found support at. So 32.8 provided support on this fib on this leg here. And it also coincided with the 20 period moving average, which I thought was quite interesting. This 3-candle foray into it there, and then we bounced off quite significantly this morning on that candle to the upside. So breach back over the 3375 area can take us up to the 34 area, which is of interest. So this is the second fib of this leg here, and you can see we're right stuck in its fib ranges. So the 61.8 of this leg down here, this 1, 2, 3, 4, 5, 6 leg candle down leg is where we're stalling at the moment, and that's proved rejection at 3363. So we're down. So again, are we going to test this again and move back up here, or are we going to breach this and move through here and down to test 3,300 level again? That's what I'm watching here on the 4-hour time frame. But at the moment, the 20 period moving average has provided support for 3 candles. Is it going to provide it if we continue to move down? So there's a bit of a bias to the downside today, as we saw on the 1-hour. Whoops, the 1-hour time frame. There we are, sort of looping, rolling top, not very positive, through this cluster of the 20 and the 50 here this morning. So it's been a weak morning for the gold market. You can see that fib level a bit more significantly there than the 1-hour time frame. So it's been down quite significantly down, having rallied up. So are we going to test this low again? 3340 is the next downside for gold for the rest of the day as we move forward. And obviously the upside resistance is that fib level and where we stalled earlier this morning at 3360. So 3360 to the upside, 3340 to the downside. Obviously we could then range between these fib levels as well as we go forward. Remember, this is the 4-hour Fibonacci levels we got on here. This is the 1 hour time frame. So if you're trading this on the 15-minute time frame, those levels become much more significant and much more obviously separated. As you can see, there's the volatility of the CPI data half an hour ago. Sorry, it was half an hour ago. But the trend, very much to the downside. We just had a cross there of the 20 and the 15 now and the 15 minutes. So you've been short this since about 12 o'clock, 11:15. Certainly would have added there, I would guess, in the breach of that. They're ahead of 12:45. 15-minute traders. Where's the next pivot area? Well, we're sort of into it now. We've tested it already. This T1 level it's got on that chart there. But then below that is this level there, that 33.42, ahead of the 33.40 level we talked about on the higher time. So 15-minute short guys will be looking for 33.42 on gold today, my friends. 5 minutes, that's 10 minutes is still short. There's a volatility of this inflation. 5-minute chart still short as well, a bit more, obviously more exaggerated volatility, but as you can see, the highs of the candles are lower than they were ahead of the data, and the lows have yet to. That was after the data down here at 33.47. So more moves to the downside. So futures overall are all positive in the US. We're 20 minutes ahead of open. And as I say, we've got a short Dow and a long SPX 50, so they'll probably cancel each other out. But I'll update you all later. So US CPI, to recap, has come in hotter than expected. As we can see here, annualized basis coming at 2.7. On a monthly basis, coming at 0.3 of 1%. The core data is coming at a bit better than expected, 0.2 of 1%. Compared to 0.3, but it's hotter than it was last month at 0.1, and the headline is 2.7 from 2.4. Is it hot enough? Will it twitch the White House? Absolutely not. It will not. The pressure on Mr. Powell remained, the political pressure at least remained on Mr. Powell, and see really what, as we saw in our calendar, it'd be interesting to see what Ms. Bowman's got to say in 5 minutes time. So I will leave you to go and listen to that. In the meantime, if you're not with us, my friends, or why not, as I say this every day, come and join us. We have got a very open, simple to use platform with the Trading Central sitting, the Trade Locker sitting on Trading Central. Most of our clients use this two-step standard challenge. 25,000 gives you a nice meaty equity to play with. If you're new, if you put in new 25, that gets you a 25% discount off of this very competitive $175 account. That's all it costs you to get you $25,000 worth of equity. I mean, let's get going, guys. And all you're doing is trading these simulated accounts with live data from live liquidity providers. Follow the rules. Keep to your profit levels. 8% on the first step. No, 5% on the second challenge. Maximum daily loss or maximum loss 10%. You don't want to be anywhere near that, to be honest. And then go through these 2 steps. Get to your funded account. You get your investment back, this $130 as opposed to $175, and then keep trading successfully like you did in the first step and the second step. And lo and behold, the money you've made becomes yours, or 80% of it becomes yours. You get paid every Friday, 7 days after you've funded an account, and the world then is your oyster. There's no ceiling. You can scale your challenges up. We are grown-ups. You can tell just by my face, I'm sure. We're not, disappearing anytime soon. We're very well funded. We're expanding as well. We've got some new guys joined us over the last couple of days. So yeah, everything's looking great. So come and join us, give us a go. If you've tried a challenge and you've either been successful or not successful, if you're on our Discord group, which I know lots of you are, Discord 20 is still valid as well, and that gets you a 20% discount. So for a $175 $25,000 account, that'll only cost you $140. Okay. Take care. See you all tomorrow. I'll be live tomorrow at different time, early in the morning for the UK inflation data. In the meantime, may the pips be with you as ever, my friends, and I will see you all again tomorrow. Take care. Be good. Be safe, and see you tomorrow. All the best. Bye-bye.